Hello, hello. Surprise, we've got another AI panel today. But this one, we're going to get a little bit of a different perspective from four of the best investors who have been collectively involved with and invested in most of the largest AI labs and companies out there. And I'm really excited for the conversation today. Welcoming our guests, Alex Wren, of course, our founding partner of Fellows Fund here, JP Sanday from Menlo Ventures, Jennifer Lee from Andreessen Horowitz, and Dan Levine at Accel. You know, personally, I'm finding right now to be one of the most exciting but also disorienting times to be an investor, especially in AI companies. And I just wanted to start with getting your feeling today of the market compared to what you've seen in your career. How would you characterize it, and what's the biggest thing that's really changed in your mind over the last 12 months when it comes to AI and investing? I'll start with you, Jennifer.
Great. Well, first, thank you for having us here, and great to be joined by my very esteemed peers. My take on the current market, I think everybody, including the investors, but mostly founders, realize the stakes are very high. So there's a lot of excitement, a lot of anxiety, a ton of actual battle on the ground, both on talent, customers, and so on, which I think is a very interesting and very exciting time to just keep pushing this type of energy and work really hard, realize the potential of the technology, the product, and so on. And to me, where I change a lot of my mind in thinking about investing compared to pre-Gen AI is there usually is a set market. You think about a category, and then there are maybe a couple winners. We talk about first movers, is it winner takes all, a lot of these market dynamics. But in this kind of super cycles, I don't know how much that applies. I feel like zero-sum thinking is very dangerous because we just don't know how big these markets are. If we talk about synthetic voice generation, or voice alone in the past, is you only think about publishing or podcasting, these type of markets, but now we just see them in agents, in conversational AI, in a lot of gaming and creative tools. There are way more applications that's really hard to imagine what the eventual form factor and market size is going to be. So I think that's the biggest sin of this zero-sum thinking. The other one is just trying to, again, use the same prior categories to apply to the Gen AI categories where we're thinking, oh, this category didn't work, like enterprise search, or again, synthetic voices or synthetic data. These are just not the same categories anymore, where you have companies like Glean, like 11 Labs, like Scale, that Dan works very closely with, that becomes sort of the new norm and expand the market opportunity.
Dan, how about for you, given that you are esteemed? And we've seen a few errors here. How does this compare to earlier stages of investing for you?
The best part of being esteemed is the gray beard. I used to have 4 colors in my beard. It was blonde, red, brown, and gray. And now I'm getting closer to just gray, which is exciting. Let's see. So I think, to be boring for a second, and take an investor perspective, my guess would be, in many ways, the risk return of our asset class has gotten steadily worse. But one of the interesting things about the asset class is it's always been a place where great returns are driven by just very large, head of the tail companies. And so it's easy to not think about the broad asset class. But even given that, I would say it's gotten harder and the risk return has gotten worse. I think some of the interesting things about that generally are on the demand side of the market, and this is just fun, people really do have active demand for AI products all kind of across the board, faster than I've ever seen before. We take this for granted, especially amongst consumers, but the last great consumer wave was probably around the iPhone and true modern smartphones. And there the rollout was iPhone comes out, next year the App Store comes out, I think it was a year or two later, the iPhone 3G came out. Meanwhile, they still had to negotiate carrier deals market by market. To credit Masa-san, one of the things he did extremely well in that period was securing the iPhone exclusive in Japan, right? This was a notable event there. Meanwhile, in this world, everyone really does have access to high-speed internet in their pocket. And it's probably one of the first major consumer waves where you can get to like 1 billion users almost overnight. And there is demand for it. My company just hired an au pair from Italy. She's from a small town in the northern part of Italy outside of Verona who worked at a winery. And she doesn't know anything about OpenAI. She doesn't know anything about the Bay Area, and she loves ChatGPT. And she was like, this is why I was the best employee at the winery. And I was like, oh, that's like from around here. She's like, no. I was like, it had to be from somewhere. So there's really been an incredible surge in the demand. That's true in the enterprise as well. I think if you think about how enterprise and business customers should think about it, there's more of a top-down mandate faster than I think we've seen in prior big revolutions. Like if you think back to one of the last transformations in B2B, you would have thought of cloud, the movement towards kind of broad-based cloud. And if you look back to the early 2010s, you would see like CEOs and CIOs of large companies going on TV to tell you how they would not ever use the cloud, right? And there was clouds that kind of preceded this, and Larry Ellison talked about like whatever moisture and vapors, but realistically, the modern cloud probably is best epitomized by Amazon, AWS, which is really like, if you give them credit for Mechanical Turk 04, if you give them credit for S3, this is 2006. So 6+ years in, people are viewing it as, I'm not doing this. They would come around, but it took a while. Meanwhile, here, the top-down mandate from executives to deploy AI, if I think about the T0 of our market is kind of ChatGPT's launch in, I always forget the year, November 30th of 21?
November 21st, 2022.
There you go. So that launch really triggered everything. And now we're only a few years later, and already enterprises are basically, I would say almost irrationally, but it might prove to be rational, saying we have to have AI products. So that's the demand side. And in the supply side, there's limitations. We're meaningfully supply constrained. Like access to GPUs, access to power, access to know-how building data centers and infrastructure is non-trivial. So those characteristics add up to like a very fast-moving, high-value, extraordinarily risky for idiosyncratic reasons asset class that has everyone very excited. And I think those are like the big conditions.
Yeah. And given all the demand we're seeing, it can sometimes be difficult to discern what is a truly outstanding and breakout company when you have multiple growing at such speeds. Alex, I think you have a unique perspective of this with Fellows Fund in terms of you have technical fellows that can really help to kind of dive deep into a product or a team. Can you talk about that approach and maybe how that helps you kind of cut through some of that ambiguity?
Yeah, thank you very much. So I think one of the reasons we set up this model is because early on we believe the technological maturity is critical for adoptions, right? So then we got a group of AI fellows. So far, we have 36 fellows, and who understand the space deeply, so they know technology is mature or not, right? So then we actually able to get that kind of deep insights, and then push those product companies for a massive adoption. So that's kind of a reason we set up this model. And our fellows, many of them are, like president of Replit, like city of Outbridge. They are at county edge. They are the leading companies, right? So they know what's happening. So and then when we talk to early stage companies, we know actually. So what's the current market status? Then we're able to guide them, right? So that's kind of our model. Yeah.
And do they get involved with diligence as well? Like, how does it work in practice?
Yeah. They actually involved. So it's surprisingly, so every Monday, our weekly meeting, normally we have 6 to 10 fellows joining us. So they are busy executives. So then they actually talk to about deals and make decisions. So we discuss about if we can decide invest or not, and the portfolio support as well. So one of the reasons they're curious about what the startups are building, right? So then, like if you're infrastructure companies, you actually want to talk to application companies, right? So that kind of things. Another different angle is also our investors. They actually, some of them are hedge fund investors. So they're in the private market. They're actually curious about what's happening in the private market, right? So the kind of these things is actually converge.
I want to shift a little bit to investing in infrastructure and some of the foundational labs as well. JP, Menlo's had a relationship with Anthropic going back a long time. Maybe could you just tell a little bit of story of how that developed and what you guys saw early on before they were really even generating revenue that gave you the conviction, and kind of how that's built up over the years?
Sure. So when we first intersected that team, they didn't even have a product launched yet. The valuation was such that it seemed like they had a product and a ton of revenue, but they didn't have either. But I think it was a testament to a team that had a very clear point of view on something and a reason for being that couldn't exist in their prior employer, namely OpenAI. And nothing wrong with OpenAI. It's just we just knew they had a different angle, and if that team, the whole premise of the company was safety, guardrails, and enterprise will always want something different that's not just an application or a different type of approach to training their models. And so when you meet them, they're eccentric for sure in the best way possible. But I think that clarity of what they wanted to be and what they were not going to compromise on, we thought there was demand for that there was going to be a place in the market for that. Now, did we literally model out the business the way it is now? Certainly not, because it wouldn't have been very credible to do. But I think that clarity and point of view has not wavered ever since. And so that was intersecting them at the right time and then doubling down fairly quickly months later when they did start generating revenue, which all the numbers are a little more public now, but it was unlike anything we'd ever seen before.
Yeah, I mean, the demand has certainly backed it up through the years. And it seems like so much of it has been driven by coding use cases and agentic coding. This year feels like the year of agentic coding as the breakout use case. And they are powering a lot of those products. And they also have a product in the space with Cloud Code as well. Can you talk a little bit about that dynamic and how they think about it as both a provider and a partner in that market?
Sure. So Dario's talked a lot about this publicly, that they, at their core, they're an API business, they're an enterprise business, so they want everybody to use them and leverage Claude models and to be very successful in doing that. He also views it as because they're the closest to the metal, so to speak, or closest to the model, and because they have purpose-built those models for themselves in certain products that you mentioned, Cloud Code, they just want to also just be the standard bearer and the example of what can be done. And so that they let the market kind of know where the next efficient frontier is, but they would love nothing more than to everybody else to be as successful as they can be. And I think that it's also reflective in the anthology fund that we have with them that we co-invest out of, and that is to, much like the iFund early days of the iPhone for Apple, to stir sort of the ecosystem of players that are going to be building on top of them. And for us, it's great because we get to see what that team, think about the number of developers that team intersects with. And then in each of these vertical areas, and then seeing what the bleeding edge looks like in terms of people's use of their models is very interesting to us. Even if, those anthology checks are very small investments, but very meaningful for us to see those things and to also understand when that team says this, when the Anthropic team says this team's doing something interesting, we like to probe why, because that helps us then compare to any net new investment we're looking at in the rest of our business. Oh, like we've seen someone push the envelope on agents doing X, Y, or Z. You don't always know what the frontier is. You only get to see what comes in the door, and that puts a lot more people in the door for us, and for them too, they get to fuel that ecosystem of the most what they've deemed to be the most interesting players.
Yeah, it's a really, really cool model. And I imagine just the hands-on support and working with some of the researchers is probably a big benefit for the early stage founders working on the program.
Yeah, they do get, those are real things, right? Other than the credits and things, they really do get a little bit of a peek under the hood of what's going on or how things are done or why the model's behaving the way it is, and a little bit of roadmap too. And we have events and things with them too, but they do get direct access to that team.
Nice. I want to drop down a layer in the stack and talk about some of the actual infrastructure providers and neoclouds that are clearly seeing so much demand. I didn't know much about Nebius before speaking with you, so that may be like a little bit of background on them and sort of what you're seeing in that space and kind of where you believe it's going now that there is so much demand for these companies, kind of opening up the cloud market, which seemed at one point pretty closed with the three hyperscalers owning it all.
Yeah, I think Nebius is just an incredible story generally. I'm biased. We're investors in Nebius, it's worth pointing out. Nebius is basically, Arkady is the founder of Yandex. And Yandex, for those who don't know it super well, for a long time was one of the largest infrastructure companies in the entire world, primarily serving the Russian market. And the way I first started thinking about Yandex was I worked at Dropbox. Dropbox, in its heyday, was one of the largest infrastructure companies in the world, initially on top of AWS from a storage footprint perspective, and then building our own kind of infrastructure in cloud. but we had a very good set of intel into who was buying what price points they could get, because it was very important to our core business. We were one of the 10 largest, and I'll say Western, which basically is all markets outside of China, clouds or like infrastructure companies. We didn't know as much about the various large-scale Chinese internet players, but you're talking Google, Microsoft, Facebook, Amazon, et cetera. And Yandex was always a company we had immense respect for. They were extremely talented. They wrote incredible software, and they had great infrastructure. So for a variety of geopolitical reasons, Coccari and the team moved to Amsterdam. The public business got kind of split up into two things. The remaining business was Nebius. Nebius had to delist from the exchange briefly, and then all of a sudden it became a public company again. And inside the public company was this incredible Finnish data center, stakes in some of the most interesting technologies that had come out of Yandex, things like ClickHouse, which is a wonderful company in its own right. But more important than any of those things, there's this team of people who are amongst the best infrastructure people in the world. And it's a skill that is basically disappearing. I remember trying to hire like great data center networking infrastructure engineers at Dropbox, and there just aren't that many of them. And the reason is that as the public clouds have gotten larger, they basically have taken on more of those functions on behalf of their customers. So Dropbox, when we flipped from using Amazon Web Services to doing our own stuff, there were all these roles and people that we needed to hire, and they were very hard to find. It's one of the huge advantages that a Meta, clearly a Google and Amazon have as they think about building this large-scale infrastructure. And just for a variety of what I'll call them unfortunate geopolitical events, this incredible team just popped out. And at the same time, the need for infrastructure by third parties in the AI space grew massively. And so we kind of intersected this opportunity and thought, I mean, this team is unbelievable. But there are challenges. There's a different name on the company. People don't know the team as well. But, we were talking internally as a team, and I just had such confidence. I knew so well from the Dropbox days how talented the Yandex team was, how good their software was. And we just had to get the word out. And, the Nebius folks had some great news recently where Microsoft is working with them on a long-term partnership around their infrastructure. And the reason is the same. And the reason why anyone would want to work with them is there's basically a shortage of the skills to build large-scale infrastructure amongst the elite people in the world. A disproportionate share of it resides in the large clouds, but a lot of other people want access to that ability. So that's a really good example of their specific skill set. I'd say broadly, it's remarkable how generally fragile each of the layers of the infrastructure piece are. All the way down to ASML, and then TSMC. Like there are single vendors that are extraordinarily important right now for a huge series of this. In the GPU space, you look at NVIDIA, people are very excited with what Google's doing with TPUs, and then you have a relatively small number of foundation model companies. So it's really important and very high leverage to figure out great skills and great companies at even particular things.
Yeah, I mean, I think the skeptical view on this would be that like it's a point in time where there's a lot of demand, people need access to the GPUs and like building data centers faster. And this is really a question for the panel, like, do you think this will provide a wedge for them to actually move up into higher level services, kind of become more of an enduring provider of infrastructure, and kind of open up this market that has been pretty much limited to a few players? I'm kind of curious to get the views on that across the board.
I think there's a lot of opportunity to build specialized infrastructure for particular use cases or modality. Mm-hmm. I think to Dan's point exactly, it's a very different skill set to build infrastructure and build distributed systems compared to training models. And we see that from the model companies we work with. Many of them are great research scientists. They're very good at training models. They're very good at inspecting, tweaking all these hyperparameters and finding the right combination to have the best performing model in the output domain. But to scale that into, across hundreds of GPUs and scale that up into a very efficient way of using the compute to put out output in a very performant way, it's just a fundamentally very different skill set. And there probably, I'd argue, 5 companies now in the market are good at doing both. And where does this talent come from to build infrastructure? It generally comes from a different tier, and these are people and companies like Nebius, I would say FAL, the generative media company that produces or supports image video models for their inference workloads are in the same domain where they're just people who are really good at distributed systems, performance engineering, really good at scaling, really good at, running large fleets of GPUs, but eke out every single bit of performance from it and produces the fastest and cheapest image, video, audio generation. And this is a very different type of workload that the teams are very specialized in, where the model teams or the application teams can focus on building the next sort of model or very intuitive, easy to use consumer and B2B products.
I'm going to talk our book really quickly, but I also want to, I think it's a great example of a few things have gone on. So first, especially, Nebius was a public company when we invested, so it was known as a pipe. But there are a bunch of these opportunities that you see in the public markets. One of my favorite companies of all time, Jennifer's probably heard me in board meetings talk about this company, is Arista Networks. Most people have never heard of Arista Networks. And if you haven't, I encourage you to look into it. It's one of the most obviously incredible companies on the planet that most people haven't heard of. It's founded by Andy Bechtolsheim, one of the founders of Granite and Sun. And they basically just build dedicated networking infrastructure. And I would argue, I think their market cap now is hovering over $150 billion. And they're used notably, this is all public data, by Microsoft and Meta, who also have competitive internal offerings. But Arista is a dedicated team just doing that. The talking my own book perspective is we're investors in a company called Tailscale. And one of my favorite things that comes up is I encourage any of you to talk to your teams that are building out infrastructure clusters and how they're networking all those GPUs together in software. And it's one of those fascinating things where I think people don't realize it, but there's room for great products in this infrastructure that are very particular, that have like a lot of value.
Yeah.
So I do think you have to worry about, over long periods of time, you have to figure out your value beyond being, in pejorative terms, like a wrapper of some other thing. If you're just a wrapper of like power or real estate or NVIDIA GPUs, you should be very concerned over long periods of time, as you would be in any business. In the worst pejorative way you can imagine, NVIDIA is somewhat of a wrapper of a TSMC or vice versa, an ASML. So you have to provide value up front. But this is one of the largest infrastructure build-outs. I mean, this is the largest infrastructure build-out basically in the history of mankind. It might be that it's being built out more aggressively than would make sense from a pure financials perspective. I think Satya actually had the best public quote on this live on TV. He basically said, and Microsoft has plenty of resources, I'd rather make the mistake of over-investing slightly than under-investing. And I think for Microsoft, that is the right approach. And I'm thrilled that he's doing that. You should be a little warier, and you're a little bit more at risk if you're a much smaller company without the wherewithal of Microsoft. But yeah, so we are seeing a massive build-out. It's huge, and there's lots of opportunities. But just like any company in life or any opportunity, it's very hard.
Yeah, but it sounds like you both think that the technical complexity of building the infrastructure and optimizing it, and especially in specific domains, that it can compound and then kind of extend into the future, and they can kind of keep playing that advantage as they move up the stack. I buy that.
And I just add one more thing, which is if you look at the founding team, so the FAL team has a number of like Python core committers that are part of that early team. These are not random people. And the Tailscale team is very early Google Linux networking people. So there's not like some accident that's happening. Like Andy Bechtolsheim is the founder of Arista, is not an accident. These are like highly specialized talent teams.
Yeah, and I think the point on different modalities is really good. I know, Alex, you guys have invested in some foundational models for very specific industries and different modalities. Can you talk about how you think about that kind of investing, and if you think there will be large players in these different domains, each providing separate models, or does it become a little bit more, a few companies providing models for different spaces?
Yeah, I think so. One of the good role models actually 11 Labs, right? So it's a great company. So we love them a lot, and they will.
Me too.
Yeah, they will have a talk this afternoon right? So I think there's a ton of opportunity for like specialized models and like mathematics, harmonic, right? So and then there will be more like AI for science models, right? So like also vertical based, there will be you will see more of the smaller models for like finance, for healthcare sectors, right? So there's a ton of opportunity for those domain-focused models, right? So, but applications is exploding as right now. So I think that there will be opportunity for both application and model and infrastructure companies as well.
Thanks. So, one of the things that has made venture challenging the last few years has been the dearth of exits and outcomes in the market. It feels like that is starting to change in a really positive way. JP, you've seen a couple of your portfolio companies just recently exit, Sana selling to Workday and OfferFit selling to Braze. Can you talk a little bit about and like give advice from the founders in the room about maybe how those deals kind of came together, how to position your company in terms of being strategically relevant to potential acquirers or partners in the road, and it's like some of the lessons you learned through both of those experiences?
Yeah, I mean, you're strategically relevant if you actually are, not on a slide, but in reality. Ironically, both of those were introductions that I made to the companies, totally unbeknownst to me that this was where they would end up, but it felt logical, right? So it's not a surprise that they ended up acquiring them, and both were inbound, very aggressive. So we always say, investors always have a thing they say is the best companies are bought, not sold, and that's like 100% true 100 times out of 100. And in both of those instances, I'd say in the OfferFit Braze instance, it's interesting because they integrated with them. So they're natural partners. So OfferFit was this AI decisioning layer for all of lifecycle marketing. So you could put your lifecycle marketing on autopilot. Turns out, machine learning and AI is better at it than humans, pulling levers. And so the lever pulling was done inside of platforms like Braze. And they could see the level of activity going on in OfferFit inside their system because OfferFit was telling them what to do every day with every user of their customers. They had a lot of joint customers. And then I think they just also noticed, the theory for us was this layer that didn't exist, now called AI decisioning, wasn't a thing. OfferFit was one of the first ones, and it started amassing a lot of value very quickly. And I think Braze, rightfully so, said, well, we're not going to give that value up. We want it to be part of who we are. And so that's when they moved pretty aggressively. When they landed one of Braze's largest customers, and they were going to continue to be one of Braze's largest customers, I think their eyebrows went up and said, okay, it's time to act. Like a week later, they made the inbound. And then in the case of Sana and Workday, I brought Workday Ventures in when we invested. And I know November 21st, 2022, because I signed the term sheet for Sana 20 days before that, thank God. But that was the first time I saw Gen AI. And I would say Workday not only was a customer of both of their products, they were reselling some of their products. And in that one too, it sort of is a natural fit for someone to look at that business, whether it's the agent side of their company or the learning side. And it had a tremendous value for them on both fronts. And so they a little bit saw it from the inside. But I also think in those situations, if I look back and say, man, we're not, of course we want to sell for the highest price, but eventually it's the founder's choice, and those are great fits for the team personally. But I would say it's never too early to make sure that all these players know who you are. Because if they're natural partners, that's going to be a good thing. These partnerships don't always end up in anything until all of a sudden overnight they might, something like this. Or even, we've had partners that, like one of our other companies called Abnormal Security, that's a very large company now, but they and Microsoft go to market together. They have common enemies. And so when you have a common enemy or a common competitor, and that's strategically relevant to a larger player, they will bring in companies to help them land deals. And so that is also another very relevant way to do it. And you can't go in thinking, I'm going to have this relationship for M&A just in case. You just have to let it play out naturally, because the other thing too, and at OfferFit, I always said, the plan has to be kind of put in place if any one of the marketing automation vendors starts getting really aggressive against us. We have to have the, in case of emergency, break glass and become them very quickly if they're going to start competing with us in a big way. And so you always want to be very wary, because if they didn't buy them, they might have bought someone else, and now the world gets a lot more difficult. And so you have to always just be mindful. It's never too soon to have those relationships, in my mind.
It's great advice for founders, and I think it extends to what we do with investing on behalf of HubSpot Ventures. We would always prefer to get to know companies and work with them before they're fundraising. If your goal is, hey, I'd love to have HubSpot or another big company like Salesforce or Microsoft invest, it's great to sort of build those relationships early, explore some of the partnership and even like customer potential before it's, hey, let's talk about a fundraising round. And those can naturally then turn into deeper partnerships or M&A. It's not the strategy for the funds, but like you said, just being there, being a critical part of their ecosystem kind of naturally leads to deeper and deeper levels of investment. I wanted to talk about is kind of like how companies, and some of these companies now that have been around for a little while are seeing big second acts and kind of adding AI into their products. A good example would be Vercel. I think you're on the board, Vercel? Yeah.
Yep.
With V0 being like a great success story of a new product. Can you talk about like how did they launch that internally? How do they think about, okay, kind of really extending what they have with the core product with a brand new AI solution?
Yeah, I mean, it's always interesting because I first invested in Vercel in 2018, and it feels like there's been many second acts. So there's always a latest one, which isn't to say like the core product people know us for, like front end cloud is great. We have a great fluid compute product. We have like a CDN product where you can use this in front. And yes, we have a bunch of AI products. So we have the AI SDK. This is actually relevant to your answer, I promise. The AI SDK, we have an AI gateway product. That's a wonderful thing if you want to work with multiple different LLMs and swap between them. The AI SDK for building your application. We have AI SDK components for your front ends if you want to chat thing. And one of the things was we built V0 actually in some sense very similar to the Anthropic story. We basically wanted to build the best AI infrastructure products, and we wanted to test what that looked like internally and work on it. And so we built V0 partially as a product in its own right, but mostly to really inform us about the best infrastructure to build. So that was the original thinking behind it. And as a result, we actually have been working on what is called V0 for a long time. We didn't actually focus on commercializing it very much. And then all of a sudden, people, in part using our infrastructure, started doing very well. We decided we'll have our commercial product as well, and that'll inform certain things in different ways, like how we use Gateway for cost savings purposes. But we also really desperately want these platform partners to succeed. And we continue to see that with kind of all of our AI cloud stuff. We recently launched Sandbox, which allows you to run untrusted code as part of that. So it's been a good second act. I think originally it came about actually similar to how ChatGPT launched. It was kind of like a project to show what was possible with our technology and to push us. And then it's kind of just taken off. And if you haven't tried it, by the way, I strongly encourage everyone to try V0 Nano Banana. You can do it right now. It's a great website. You can simply do a photo booth with any theme you want in your web browser on your phone. It's awesome. But yeah, and then it's just taken off. And then we tend to put a lot of wood behind arrows that work, which I think is something that Vercel does really well. And so we had a small team, but we really encouraged them to kind of run with it. And whatever they needed, we would give them. And that's been true on, again, this is important. V0 is like one team, but they push the gateway team, they push the AI SDK team, they push the code sandbox team, and that ripples on behalf of the whole organization, but with all of our customers getting the advantages.
Super interesting. And they haven't been around a long time, but 11 Labs music launch took me by surprise a little bit. Was that a separate team building that? How did they approach sort of entering this new space, and how has it sort of benefited the entire organization? Same way.
Yeah, I'm glad you enjoyed the 11 Labs music product. I really enjoyed it because I have a 9-month-old baby, and I create lullabies every night for her, different lullabies, depending on the mood. This is actually not all of a sudden we're going to do music. The team has been incubating and building this product for over a year at this point, or before they launched. And since the beginning of the creation of 11 Labs, it's always been the vision for the founders that they want to be the audio platform, not just voice. We start with voice because it's the most easy form, most understandable form where we communicate in, voice forms, and having synthetic generated human voice is the first act. And then they launched sound effect, they launched music as the next thing. And it's so interesting that when you think about these as first disjointed, similar modalities, but for models themselves, it's actually not that dissimilar. Like when you talk to, or when you're prompting a music model, sometimes it tries to rap, it wants to speak. And if you even prompt like a sound effect model, it also wants to sing. So these are very fluid sort of modalities, where for 11 Labs, to create music as its own product and giving to creators so that they can walk very fluidly in between these modalities to create anything they want, like produce sort of music in a game and have sound effective barks or door shuts, and giving like the actors sort of ways to speak, is just realizing all the dreams and possibilities for the creation.
That's great examples. Thinking about applied AI and agents right now, it seems like there's two major kind of flavors. You have companies that are building more horizontal products for any industry, and then some companies that are really building specifically for a specific function or an industry. I know, Alex, you guys have invested in a lot of vertical AI companies. Can you talk a little bit about some of the patterns you've seen when looking at them and like what the playbooks are like when you're really scaling within an industry and applying agents to a field?
Yeah, thank you. So, first I want to say one thing. So we love rappers. We love rappers. I want to emphasize that we really love rappers. So, we started these things like 2 years ago in 2023. So we actually look at the companies who are actually not competing with OpenAI and Anthropic, which rather we want to invest in companies. Once OpenAI and Anthropic release a new model, we always benefit them. The Gamma was a good example, right? So the presentation, they are the number one AI for presentation company right now with a lot of revenue and profitable, right? So over 60 million users. Right, so then when later, that was the beginning, was more like a generic AI, like a vertical AI companies. But later, you actually deeper into every vertical, healthcare and accounting and insurance. So surprisingly, we look for those founders. So actually, with maybe AI is not number one thing. Actually, it's more like a domain knowledge and a go-to-market experience. So you know how to build a product, AI product, based on models from OpenAI and Anthropic, right? So 11 labs on like voice agent. We talked to many voice agent companies. They all build up this kind of application based on 11 labs, right? So then we actually those founders being able to find a good entry point, and quickly build a beachhead, span to the whole market, and then scale really fast. So like one example is a company called GCAI, is a general counsel, stands for general counsel, right? So they grow for 8 times revenue in the last 8 months. So like that's kind of crazy for like enterprise companies, right? And also insurance, we invest in 3 AI for insurance companies. So one company called Coccari Insurance, they actually provide the insurance policies to customers directly, right? So there are many of those examples who know the space deeply. Right, so who know where the customer, they go to market and scale to the revenue fast. So that's kind of a company we look for. Yeah.
And I think one of the great things about this is that it's actually making certain industries more investable than it was the last generation. These places where VCs had sort of written off as you can't build good startups there. I think we're all sort of reconsidering that. We were talking about higher ed earlier today. Can you talk about your recent investment there? Like, how did you think about this market as being like now ripe where it wasn't before?
Yeah. Not exactly a bastion of venture capital returns being made in higher ed. And I think in the old world, it was a market that you sold tools to. And with agents, and this company used to sell kind of a tool to that market for a long time. And then agentic technology got good enough. And these were founders who just by transitive property have been in that market for a number of years, just understood the nuances of that market and how to build for them. I think that's one of the things people don't always appreciate is how much you have to understand, not just your user, but also the organization that's buying you and what you're really selling into. So this company is called Levine, and they do AI agents for higher ed, but they don't touch the classroom. They don't touch anything, and there's too much religion in there. People think one way or another, just they stay out of that. They do all the administrative part. And if you think about underwriting that, you're like, okay, but what's it really doing? I always use this as the great example of, again, a market that was completely, think about markets overlooked for tech, healthcare, legal, higher ed, all of them creating massive companies, insurance, like those are areas that people didn't want to sell into before. They were called laggards, but they're one of the biggest sources of pull for AI. And in higher ed, I think of it as like a perfect storm. So to go off on a little bit of a tangent, but you can, as founders in the audience or as people think about investing in these areas, this is what we look for, right? Like venture capital is very unnatural. Like we're almost like human growth hormone for companies. And so they're trying to do things that are not natural. The best companies, by the way, never raise any money from any of us. And they keep all their money and they, keep all the pie, and the pie is enormous. But hey, they want to have ambitions that outstrip their abilities. And so that's where we come in. And so I think that market, you have what's known as a demographic cliff because of the fertility rates, at least in the United States, went down a lot. So there's going to be fewer humans going to college. Then people are questioning the ROI because the costs have, I didn't even realize how much the cost had ballooned since I was in school 20 years ago. Holy smokes. But that cost has risen. Salaries and wages getting out of post-secondary have not. And so there will be fewer people deciding to go to college in the future potentially. And that is revenue. That is a massive shift in that end market. And the problem these are all nonprofit. By the way, all the universities are nonprofits. So they spend all this money and they charge a tuition to pay for those expenses. And it's been known, there's almost like one administrator per student in some schools, which is crazy. An example, and these numbers are public, the University of Nevada, Reno has a $400 million operating budget. Just think about how big that is. And a university, if you look at it, it's really like a city. You know, it's like a big conglomerate and a city. They feed people, they house people, and all running that is hard. And so that's what this company does. It creates agents that helps them run all that stuff. And then all the particulars about the administrative part of higher ed being a regulated industry and all that. So I think when you look at it that way and you look at how much money is being spent in that, it's $240 billion, by the way, if you aggregate all the operating expenses. That's a big market all of a sudden. Selling a tool to times number of students for people who don't want to pay, not that big. That is much larger. And that perfect storm of all those forces at play for these universities now being completely existential, they're in a big existential situation or a big existential threat in front of them, they cannot buy this thing fast enough. And so I think that's, and knowing, you know, if you would say, okay, well, can Accenture customize Anthropic or OpenAI to use it for them? Sure, but they're like, you have to spend all the money on those people, and they don't have engineers on staff to do this stuff. So as much as the technology works, it's also the innovation they've had in the way that it gets, they train them and that the way that they implement them and the way they can configure them for that particular market is very nuanced. Mm-hmm. And I think that there's a lot in that causes them to have, 6-figure ACVs and less than 2-month sales cycle because of that.
Yeah, I think it's a great example. And we'll see this happen in many different industries. Kind of to wrap up, maybe we'll do a quick fire round. I want to get a specific thing. What actual industry do you think will see the biggest change in disruption by AI agents in the next 2 years? And while they're thinking about that, if you have anybody has a question they would like to ask the audience, think of it now. I will put it to you for an audience Q&A for the next one. But we'll start down there with you, Alex.
Maybe I'll start with the obvious one that many people ignored, which is the robotics space, the consumer robotics space. It's lots of reasons because we see in Silicon Valley don't understand much about the hardware and manufacturing. So that's even we see things here, so we still invest in foundation models of just robotics companies. But you ignore all those product companies and those kind of consumer robotics companies. Yeah.
So I don't know which one. If I knew, I wouldn't tell you, and then I'd probably start a company in it. There's a great chart that shows the inflation in different end markets, or deflation in some instances, over the last 40 years. And all of the ones that are incredibly inflationary, I would say this is an incredible deflationary force in AI, and I'm rooting for it to attack all of those. Top of the list is medical services, college textbooks, college tuition. I got those two already. Medical, it's more obvious, but there's a ton of other stuff that has just been incredible pressure on inflation. Food, beverage, all this thing about trying to be healthier but not do it at a higher cost. We need something there. I don't know what it's going to be. It's going to be a combination of robotics, AI. Something's going to have to happen to put some kind of downward pressure on inflation. So I'm rooting for all those in the red line category of driving inflation.
Jennifer?
I think my answer is actually all verticals and all industries. It just at different speeds. Where if I have to pick one that's seeing the fastest adoption and fastest disruption, is probably creative. And this is the time where we're seeing a lot of the creative tooling effort becoming so attainable by non-professionals. And as long as you have great ideas, it's very easy to realize that through generative video, generative images, audio, and so on, combine these modalities to create something that's short films that we're seeing today in marketing, campaigns, where we're just gonna see more and more of that still being utilized by the creatives, but just with 10x type of tools.
It's good. I wasn't going to let you off with the all industries, so I think it's a good answer.
I'm going to give 3, but then I'll give 1. So I would give creative, and my favorite reason for creative is basically like in creativity and creative spaces, hallucinations are a feature, not a bug. I think software engineering, largely because software engineers have a high demand for trying new things and improving their own productivity at a rate that's unusual for other industries. But the one that I think has to be the biggest in practice in the next 2 years, like by multiple orders of magnitude, is going to be industries that rely on basically commodity human knowledge, which most notably would be BPOs or support. Like a tier 3 support operation is strictly dominated. It's not even close. And so you see Sierra and Decagon where bookers are invested. I mean, that industry is almost definitionally screwed.
I think we're getting pulled off, so I'll just end. But thank you so much for your time and insights today. Can we get a round of applause for the guests here?
Thank you,
so
Adam.
much,
Thanks,
Alex, for
Adam.
having us on this wonderful event. Really appreciate it.
Thank you so
Thanks,
much,
Adam.
everyone.